Chapter 30, Simple Saving Incentive Matching Plan, IRAs. A simple IRA can be partially funded with salary reduction by employees. That is true. Contribution limits for a simple IRA are the same as other qualified plans, but with less administrative cost. That is false. The contribution limits are different for simple IRAs. In 2019, $13,000 plus a $3,000 catch-up. Question 3. An employer can make contributions to the simple IRA of an employee who is 72 years old. That is true. If they could not do it, then that would be age discrimination. So the employer may make contributions to the simple IRA of someone at any age. Question 4. A simple plan can be used by an employer that has 150 or fewer employees. That is false. It is 100 or fewer employees. Question 5. Participants who have reached the age of 50 in the plan year may be permitted to make catch-up contributions. And that is true. In a simple IRA, it is $3,000 catch-up. Question 6, I don't believe is correct. An employer who adopts a simple IRA cannot also in the same year offer employees. They cannot offer the employees a SEP. If we look at page 222 of the 15th edition, it says if the employer maintains a simple IRA, it may not maintain a qualified plan, SEP, 403A annuity, 403B tax-sheltered annuity, or governmental plan other than a Section 457 for that year. So answer E says only B and C, tax-sheltered annuity, a capital accumulation, but A likewise cannot be offered. Therefore, I don't believe that answer E is correct. A and B would be correct. I see no mention of a capital accumulation. So therefore, I believe the answer is D, only A and B. Reading further about capital accumulation refers to the reinvestments of profits and dividends into a company's ongoing projects, or a defined contribution pension plan, group retirement savings plans, and educational plans all fall under the loose umbrella heading of capital accumulation plans. And nowhere do I see where that is prohibited. Consequently, as I said, I don't believe the book's answer is correct, because it should be you cannot have a SEP and you cannot have a tax-sheltered annuity. Question 7. Advantages of a simple IRA from the viewpoint of the employee include: A, benefits are easily portable. Absolutely. Contribution limits are higher than in a traditional or Roth IRA. That's correct. $13,000 plus 3 catch-up versus the traditional or Roth is the $6,000 plus the $1,000 catch-up. C, contributions earning are tax deferred. That's correct. Therefore, all the choices are correct. E. Question 8. Which of the following is true about a simple IRA? A, only employee contributions can be made to a simple IRA. That is not false. The beauty of the simple IRA is that the employer is seeding the account for the employee. And of course, all the contributions are 100% vested. B, there is a 25% early distribution penalty for the first 2 years of participation. That is correct. It's the simple that has this first 2 years participation, 25% early withdrawal. C, employee salary deduction and contributions are not subject to FICA and FUTA. That's not correct. They are. An unlimited refundable tax credit is available to simple IRA participants. That is not true. And distributions when simple are eligible for the 10-year averaging provisions available for some qualified plan distributions. No, that is not true. So the only true is B. There's a 25% early distribution penalty for the first 2 years of participation. Question 9. Which of the following is not true about a simple IRA? So find the false statement. A, an employer may deduct contributions, both employee salary deductions and employer matching if certain requirements are met. That's a true one. B, if the employer maintains a simple IRA, it may not maintain a qualified plan for that year. That is true. Employer contributions are not subject to FICA or FUTA taxes. That's true. Certain lower-income taxpayers may claim a temporary, non-refundable credit for elective deferrals to Simple. That is true. Therefore, an employee covered under a Simple would be considered an active participant whether or not salary deductions or employee contributions were allocated to his or her account during the year. That is false. Question 10. Salary reduction elections must be made by employees during a 60-day period prior to January 1st of the year for which the elections are made. The only way to know that is by definition 60 days. Question 11. Owns and operates a large greenhouse, 110 full-time employee workers beside herself? No. She may not have a simple IRA plan because the maximum is 100, so the answer is false. Question 12. Bob is 73 years old this year. He has been a key employee of Appleton Bookkeeping Services. He joined it 50 years ago. The owner would love if Bob stayed on indefinitely. He's in excellent health. Bob says he'll retire at 75 while he still has time to enjoy. Appleton Bookkeeping established Simple for employees 5 years ago. Which is the true for Bob? A, Bob can make a deductible contribution to his own traditional IRA. No, Bob is 73. He cannot make a deductible contribution to his own traditional IRA. B, Appleton cannot make a matching contribution to Bob's simple IRA because he is over 72 and a half. That is not correct. They can. There is no age discrimination for simple IRAs. C, Appleton can make a salary reduction contribution to Bob's simple IRA. That is correct. So the answer is C. Question 13. I'm a Sap is the sole provider of Maple Sweet, a candy business, uses maple syrup. Maple Sweet is an unincorporated business. Based on this information, can IMA adopt a simple IRA? Yes, she can. Simple IRAs can be adopted by sole proprietorships. June Tandy is covered under a simple at Barker Jones Auction House, where she's employed. This year, no salary deductions, or this is key, employer contributions were allocated to her simple IRA. If June makes a contribution to her personal IRA this year, her deduction limit will be based on those applying to a person who is not an active participant in the qualified retirement plan. That is true. In this plan, they received no salary deductions, nor employer contributions were allocated to her simple. Therefore, she is not an active participant. So A is true.